Hey guys, welcome to the Wealth Wisdom Financial channel, YouTube, podcast, all the things. We've been doing a lot of interviews lately, and as you can tell, I'm in my home office. It is summertime, so that means that, if you have kids, sometimes they're here, sometimes they're not. There are all kinds of things happening. And so I love the fact that I get to be working from home and still doing the amazing stuff we get to do. So today, though, I get to interview a new friend, and you're going to see why I had, we get lots of requests. But when you get some people that are like similar to you, you start saying, maybe we should ask them their story. So I am interviewing Palmy and then her sister Nancy. They are in business together. They are apartment syndication experts, entrepreneurs, real estate investors, and they also used to be in the fashion world, and they left that, because similar to why we left probably the coffee world. And so they're trying to help others break free in the financial world, just like us, and build their own financial framework. So they do a lot of great stuff, and have a similar journey that we do. Just instead of coffee, they're in the we're in the fashion world, and me talking about fashion. I mean, seriously, look at me. Am I fashion? Um,
You're a fashionista.
No, I mean the closest I've gotten to fashion is we've been watching Emily in uh, France, or Emily in Paris, and we've been watching that, and all the fashion things that are happening there. I have no idea if it's related to the real world, if it's any close to the real world of fashion. You would probably know more than me, but yeah, take us to the Wayback Machine. You and your sister started your own thing, and
Yeah,
now doing your own thing now, but it was different.
yeah. So, we were originally out of school. We started in the fashion business, and it started small. In fact, uh, we Nan had $2,000, and that was our seed money. So
Mhm.
we started like very small. I don't know if you know what
Oh,
rhinestones
$2,000. That's a whole lot of money.
are.
Yeah,
Well, I mean,
I'm just
but
kidding.
compared to today, yeah. So basically, I don't know if you know what rhinestone appliques are. So they're like fancy crystal stuff on shirts.
Mhm.
So we started out trying to sell those to brands, and we were just talking about this the other day, like we would they would test us and they would just give us something super crazy, and she and I would just switch turns putting these little rhinestones on, like thousands of them on this one applique, just to submit as samples. And so we kept doing that for a while, and then we got one order that became multiple orders, and we started producing clothing for the same brand. And then it kind of like it kind of like just snowballed from there, when one small thing became something bigger. Basically, with that business, is like it's all about building not only the trust with the brand that you can do things, but also building relationships quickly with the suppliers and the factories, so that we can be the person who kind of bridge that gap. So we did that for probably like 5 6 years, and then one day our over the internet, I saw an article that says our customers shutting down all their stores. So we were at that point, we've built up like a like $4 million business.
Mhm.
From
Which is
2000.
from 2,000 to 4 million.
Yeah,
Like that's what I wanted to get to. Like, you didn't have a rich relative to start. You started from hustle, and then you
yeah,
grew it to 4 million. But
yeah,
then that happened, and you're like, oh my gosh,
yeah.
what
Everything
is that?
happened so fast because it's like we felt, and I think this like a lot of people maybe not be fashion, but they feel this in their inside, but they don't take the action quick enough. It's like your coffee business, the same thing. It's like you start seeing like some sort of pattern, and you think
Mhm.
your mind, okay, if I have a little bit more time, just give me a little bit more time, then I'll
Yeah.
figure it out. But it never works out that way. It always happens before you're ready. And with us, we like 95% of our businesses like vanish overnight. And so we had to really quickly decide what's our next thing, because for sure we were lucky that that client was actually like a very what do you call it, like a very ethical client, so they'll pay you on time. But in the fashion business, it's very cutthroat, it's very dirty, it's not, and probably like your music background as well, like it's
Yeah.
not as prestigious and beautiful as the final product. There's a lot of scum
Oh, yeah.
stuff
Yes.
happen.
Yeah.
And you know, so like we felt like, okay, we need to get out of this. Like if we keep staying in this, we'll make money, but it's not going to be healthy or sustainable. So we then got into flipping in LA because we live in Los Angeles, and flipping was good. We made like, in LA at that time we were making probably about 150 to 200K per flip,
What
because
year was this when you left?
this was 2017.
Okay. Yeah.
17, 18. So it was like at the place where like prices are still relatively low, but there are definitely people who can afford million
Mhm.
dollar homes that we were selling. So we did that. We started doing that. My sister Nancy, she heard she saw an ad on Facebook about, hey, invest passively in multifamily apartments, and you'll save a lot in taxes. And so she basically dragged me to this event, and so we listened. We started passively investing, and then like the flipping business was just really a drag, because it's like the contractors, even if they're the same ones, they're never reliable,
Yeah.
and there's always excuses. There's always reasons why something isn't done, and everything keeps becoming more expensive. And then the building and safety department are very horrible out here. I don't know about in your area, but like here, they're like, one day they can tell you do this, and then the next time an inspector comes, it's a different inspector. They can tell you literally the opposite thing to do.
Yeah.
So we're like, "Okay, this is
Like,
not fun." And then during COVID, it got even worse, because yes, we were considered essential, but a lot of things were moving really slow. And we're like, oh man, I don't want to do this anymore. We had one last property under contract to sell, and we're like, okay, that's it. We're not doing this anymore. So we were already started getting into multifamily, but we fully got into multifamily basically around that time.
nice. What have you seen happen post COVID? And now you've done a business. You've been able to exit from that business, start another one. That I hear things all the time with financial, being in the financial world of, if I
Yeah.
just get to this, then I'll be happy. If I just get to this, then I'll be happy.
Yeah.
And now you've kind of transitioned to where you're at now. What happened during COVID years, post COVID years, for
Yeah.
your real estate? That, and we're still in a weird spot, right?
Yeah. So like right during COVID, it was tricky, because like we purchased our second property. We closed on our second property April 2020. So um we were had it under contract exactly when COVID started happening.
Yeah.
And being in Los Angeles, we couldn't sign the loan in, not we wouldn't have signed in person, but we couldn't go to like a to sign the loan at a notary. The notary had to come to my house in front of the garage, sanitize everything. It was really interesting. We couldn't
Yep.
go to the apartment because we couldn't fly, and so we took over the property, and it took like maybe 5 more months before I actually went to the apartment. Um, like interest rates were very low at that time, because the government were really trying to ensure that the economy didn't sputter too much.
Yeah.
So in fact, for real estate investors, it was a really good time to buy, because
Yeah.
we were buying stuff at like 3%, maybe three a quarter, 3.5% interest rates, and things were amazing. So we went from our first property we purchased in 2019 before COVID was 6.9 million. Our
Yeah.
next one during COVID was 6.7. We've sold those two. The next one jumped to about 16 million, almost 17. And then the next one was in the 30s, another 30 million. Basically, we bought like a whole bunch during that time.
Yeah.
Um, the last one we closed was a $77 million apartment that we bought. So, but that one was as interest rate was rising. So that time was a really good time to be a real estate owner, because stimulus checks were coming in, a lot of money were floating about, and so people were paying for um, apartments at whatever price. Basically, it was really amazing. As interest rates starts increasing, then there's downward pressure on mortgage, costs, um, labor costs, inflation, supply chain disruption, stuff like that, which everyone's navigating through right now.
Yeah.
And I
Yeah.
think 2025 it becomes like a sort of like the peak of that, and then right now after that I think we're going to see a totally different reality.
Yeah. And what's fun is when you were sharing your story, like March 13th,
Mm,
2020, that's when I bought my first house. Closed on my house that day, which was
yeah.
the day that the world shut down, I think, that weekend. If everybody remembers March 13th. And I'm like, did we just make a huge mistake or is this really good? I don't know.
Really
And
good
then it
in
was really
hindsight.
good decision.
Yeah.
But at the time you're like, how are we gonna pay our mortgage if we can't work? Um, and so you probably had the same situation. You're like, uh-oh.
Yeah,
Um,
we actually had, okay, so with that apartment, what happened was, and like I know you became a really good at like financial models and stuff like that. Very impressive too, coming from your background. So I think on that side, like we have very similar experience of like going from not knowing any of this stuff to like becoming immersed and expert at it. So with that apartment, originally we got it under contract before COVID. So we had assumption like it's income producing. So we're assuming rent increases. We're
mm,
gonna remodel. We're gonna increase all these things that are gonna increase the value of the property. But as it was under contract, the world shut down.
yeah,
So we had two options. We already had money. Investors already started wiring money beforehand. So we had two options. One was just leave this deal, similar to how you bought your house. Like we had earnest deposit that was non-refundable, about 300,000. We would just have to lose it, just walk away. Or the second option is go back to the seller and negotiate a different term, which they were not happy with because they kept telling us, no, rent's increasing every single month, occupancy is really high, don't worry about the things that you're hearing on the news, it's not happening on the ground. But we
yeah,
couldn't rest on that, right? So we negotiated several things, which was really tense, and there was a lot of cursing at our broker for it. First thing we negotiated was, we need to have because this was a Fannie Mae loan. So Fannie Mae required us to have a larger escrow deposit. It's like 18
mm,
months
yeah,
mortgage, interest, um, uh, insurance, and property tax. That all had to be 18 months worth of that upfront had to be put in an escrow so that they can ensure that if we get this apartment, we're not going to lose it because we can't afford it. That
mhm,
was so what we negotiated was the seller actually lent us money so that we didn't have interest free until
yeah,
we sell the property. We won't pay them back, so that we can sufficiently cover that. So that was a really big win. The second one was he had to guarantee that rent will stay at the same level as April 2020 for the next 6 months. And if it goes lower than that, he has to reimburse us up to $500,000.
mm,
And the third one, I don't remember what the third one was, but it wasn't as important as these first two. But that was like a really big win. And that was the reason why we actually chose to continue, because otherwise we would have felt very uncertain. Because, like how you said, you didn't know if you can, like, where can I find income to pay the mortgage? For us, we were thinking, will the renters pay rent?
yeah.
Who's going to pay rent? Who's going to pay the mortgage? So those were the things that we had to do in order to get that done. Yeah.
Well, and as the listeners are listening, one of the things that that I want you guys to hear is she knew her numbers, right? And a lot of times people go into real estate and they just think it's going to be a quick fix or quick
Yeah.
thing, but you had other contingencies set up, but you came into the deals knowing your numbers, right?
Yeah.
Um, that probably, I would think, was something that you had to know in your former business, right? To know when to step away, when to make a
Yeah.
switch, and that muscle has transferred. And then the what do we call it? The surroundings change,
Yeah.
whether a supplier leaves or we have COVID. Things change, right? But yet you're able to have a good foundation
Yeah, we
set.
sold that one. So we sold that one in 27 months. No, 24 months, and got like 1.7, something like that, X return in that short period of time. So it worked out really well for the investors who were
Yeah,
like, I mean, I have to give all the credit to them because they had the faith to continue with us
Yeah,
when everything told them not to.
yeah, yeah. How did you keep them, um, I don't know, staying on there? What did
Yeah.
you do? How did you keep your cool in the midst of
So
chaos?
So basically, like, there are several investors, probably like we were raising about $3 million, and so like 1 million plus wired their money before the shutdown, and
Mhm,
then more were asking for wire instructions, and we told them don't wire yet because it would be like we don't know if we have to wire it back yet because we were still negotiating, and it was basically us communicating the entire time what was happening, and we were very transparent. We told them, look, this was the original financial model that we presented you
mhm.
and you agreed to, and you we wanted to invest with us, you signed the subscription document, the investment documents. But the new reality means that all that's gone, and this is the new set of financials that we are projecting. And we understand if you want to or don't want to do this, you're completely under no obligation to continue. We completely get it. And we were just honest, and somehow for some reason they chose to stay with us. And so the return originally, I think we projected like 1.7 and we got 1.9, so it was already more than what they expected in a shorter period of time.
And how did you, so I have several friends that are raising
Yeah.
money and for various projects. How did you start from $2,000 to, raising capital for $3 million? Like, what do you, like, know rich people that you're like, "Hey, let me go hang out in your
I
living
mean,
room?"
like,
Or what did you do?
we did the thing that like most people suggest at the beginning when we didn't know people. We went to real estate events. So we
Mhm,
connected with a lot of people and we just talked to them and just told them what we were doing. That's how we got our first apartment. So this one was a continuation of that, just like continue networking with people. It was really just sort of like hand to hand
yeah,
meeting people, nothing online or anything like that. And like that is now considered a very small raise for us. Like the last raise we did was 39.4 million on our last apartment.
mhm,
Um, so the thing that like I feel most people may think like, hey, it's 3 million or it sounds like a lot of number, but we raised like our minimum is about $75,000. It started out at 50. Our minimum to invest with us now is 75. But
mhm,
typically, people who invest, they'll put in about 150 to $200,000. So if you break it down into like, okay, that means that let's say it's $200,000 and you need 3 million, you need 15 people.
yep.
Are there 15 people with $200,000? Yeah, there's a lot of them. And so I think like if we break it down that way, it makes it easier. That's how I kind of approach it now.
And then did you have, like, again, I have friends that are like, "Hey, I wanna do this." Did you
Mhm.
have papers, like a good plan to show these people and say, "Hey, here's I want you to invest
Yeah.
500,000 into this." Like, did you just do a handshake or what did you do to get them to say, "Hey, I believe in Palmy"?
So basically, we're a heavy like insurance. We're heavily regulated, so we're
Mhm,
under the Securities Exchange Commission. There's an exemption that allows us to raise money privately, and it's
mhm,
not to bore people. It doesn't really matter. But basically, we have attorneys who draft private placement memorandums, which are basically a set of documents that we use to inform our investors of everything they need to know about the investment, from the people involved, the property, the financial models, business plan, projected hold time. All that stuff is in that document, and they have to read it very carefully before they commit to us. So the order is like, for instance, like right now to this morning, I got a draft for another it's called PPM that I got from our security SEC attorney that we have to read for another project. So we read through that at the same time. Primarily, it's my job on the team to create the financial deck that we present to our investors. So we just go through and gather information as best as we can, present the information, very matter of fact. We don't use like sort of like scarcity tactics or like twisting people's arms. My philosophy is like, if you want to invest with us, you will invest with us, and if you
yeah,
don't want to, it's also okay. So normally we'll have the PPM ready. We'll do a presentation, and at the end of the presentation, we provide a link. And they, if they want to do it, they go and fill out the link, and then we email them wiring instructions. They wire the money. We confirm the position. Other people may do something different, like hound them, call them, harass them until they like basically like give in. But for us, we don't. It's like if you want to invest, you will invest.
And how many presentations when you did your first soiree into this, I
Yeah.
guess, how many presentations did you do? Um,
Um, the first one, the first deal, very first one in 2019, we did one presentation, which was like a group one where it's like over Zoom, and then a whole
mm,
bunch of investors joined, and probably like no more than a couple more from that, because basically the first one was enough. And
mm,
because like the way I explain it, I don't really maybe it's a good thing, maybe it's a bad thing, but like I don't like follow up if they don't express interest. Of course,
yeah,
if they ask questions, I would definitely hop on a call. But if they just join the webinar but they didn't take action, I would just say, okay, I'll chalk it as like, okay, they don't want to be in it, and that's fine. Yeah. So
yeah.
we don't do too many. Even now, we do maybe one basically
But
presentation.
is it a good list? Like, do you find a real estate investor group that
Yeah,
that
like now my list is not based the original list. I I still have investors that come from that list, but my lists have become basically more repeat, more referrals. So the
Mhm.
people we've sold 3 properties. We have 10 that we've bought, and of that we have three. And that 10 includes the development that we're building, so we haven't sold it yet. So basically, like we have deals that have gone full cycle, 3 of them. So we've had people who have gotten really good experiences, and so they do a lot of referrals.
Yeah,
And the dollar amount also has increased. Like because we started at 50,000, most people invested 50,000 back then, but now it's closer to 200 plus.
yeah,
Like
yeah,
there's people who invest a few million. My next deal, there's someone who's going to put in like 3 million something. So the dollar amount increases. So it's like, it's not about, and then that's why I go back to like, it's not about having a mass list. It's about having the right people on the list.
yeah, yeah, yeah. Which is true, and that's again where sometimes people, but you have to ask. One,
Yeah.
you got to make sure you ask and be present. And if you're not going to an event that has people, well, then you got to get in a room that does,
Yeah,
right?
for sure.
Um, and then I think about that idea of going to full cycle. Like I've one of mine that I did. Um, happened. Now I made it, and now I'm going to do more. Right. Same idea, right? As a buyer,
Yeah.
right? And so if you do what you say you're going to do, right, and you follow what you said, then more people are going to be like, oh, but I want to do it again then, right?
Yeah. It's so
Um,
natural. And it's like the most important thing about this business is like you have to care more about protecting their money than they are. So it's like you're looking out for their best interest. Some
yeah,
people we will tell them point blank that you're not in a position to invest with us right
yeah,
now. Don't invest with us. We can do this again. We're not going anywhere. So it's like every day, every night when we go to sleep, it's I tell everyone all this time, and it's truly my belief. Like, I would rather lose my money than lose your money.
yeah,
I
yeah,
would do whatever in my power to protect your money that you put your trust with us, because you could have chosen just about anyone. And I believe in this business, like the reason that you chose to invest with us is because you trust us. And we're
yeah,
not going to let that, we're not going to, we're going to take that very seriously, and we're not going to let you down. And so I think like when we approach it that way, they can sense it. The investors can feel that that's our sincere approach. And so, that's
yeah.
all you have to do.
And I think that's again why I wanted you on here is because as we had our intro
Yeah.
call, that the same kind of conversation, right? And there's a lot of people who are doing syndications or other things, but I know some of them. I'm like, they're a little sleazy. Um, you've seen them, and some that you're like, the what do you call the BS meters going off,
Yeah.
um, and for me, what I have is my integrity,
Mm.
right? And as we do what we do, and I'm in the infinite banking space, I want to have that regardless of if I make a sell or not.
Yeah.
Um, and that's what I definitely know I'm going to keep that. And so that's been fun. And then also as we grow, like, and this is probably you guys, those numbers. they just kind of shift, and you're like, oh my gosh, I
Mhm.
can't believe what we're just talking about now. I mean, you probably are thinking that too. Like, oh yeah, just $34 million, and you're like, that was more than what our business was worth.
Right.
Um, right? Has that shifted you, or have you built more confidence over time?
Yeah.
Um, what has changed in you personally that you're like reflecting and saying, from Palmy maybe 10 years ago to now, what would you be telling her?
I mean, like the thing that is so amazing is like the numbers don't really matter. Like they're just like zeros with commas. And so like for me, when I would not have known 10 years ago that we would be in this business at all, because my vision was so short-sighted. I
Yeah,
was just trying to survive like the next day, next month, next week, next year. Like I couldn't think further beyond that. But when we're in the real estate or just investing world now, it's like there's so much wealth out there. And like if you're timid and you stay small, you're gonna continue being you will grow as big as your courage. And so like
yeah,
for me, I just felt like I trust my knowledge, I trust my team, I trust my partners, I trust myself to know that like what I can handle. If it's too big, I wouldn't do it either. I I have a strategy where my mindset is like I want to go grow fast, but I want to grow fast in a sustainable way. And
yeah,
so like now my next goal is to have a $10 billion portfolio.
yeah,
And I have a path to getting there. And it's something where it's like, have you, I think we talked about this, the book 10x is easier than 2x, Ben
yeah, yeah.
Hardy.
I
So
don't,
it's
I
like,
don't talked about it, but I've read it, and
okay,
it's amazing.
so basically like the concept of like linear growth versus exponential growth is you can grow faster by doing less, by focusing very having very mindful focus on only a couple of things that will get you that goal.
Yeah,
Everything else becomes a distraction. And so every single day you have to ask yourself like, are the things that I'm doing giving me exponential result? Because at the top there's less competition.
yeah.
When you settle for linear growth, there's a whole bunch of people there. And my experience is like why we've grown fast is we leverage figuring out how to grow exponentially. It's kind of bizarre or like impossible for a lot of people to think like when you have zero family, zero background in real estate to have 400 million asset under management in 6+ years. It's like how is because we really hone in on that.
When you probably, because you didn't know the industry, you had no idea what the ceiling was or
I mean,
is.
like I I I see like other people, like for instance, like Blackstone. I see how massive they are, and I
Mhm.
read about how they started with like $200,000 in the 70s, and it was so hard for them to raise that. And I think I can raise that easily. Or I hear about how Jeff Bezos was struggling to raise $1 million for Amazon when he first started, and how much equity he had to give away. And I'm like, from day one, I was able to do that already. So that gave me confidence that even the best of the best in the entire world, they started at a point when they had to raise money that they couldn't do what we can do. And
Yeah.
so and then it gave me confidence to see that I can do that as well.
Did you so something I've been thinking about with that 10x is easier than
Yeah.
2x, and this linear versus um, exponential. And I've been thinking about it a lot lately, in that you just told me what your like superpower is. As far as raising money and doing that kind of thing, it's just a natural flow for you, right? Whereas other people, maybe it's not, or your sister probably has different skill sets,
Mhm. Mhm.
different superpowers. Have you
Yeah.
seen where your superpower and her superpower has been able to amplify
Yeah.
this?
Yeah. In fact, like I would say, like while we're both very good at capital raising, we're
Mm,
good in different ways. So like
yeah.
she's very good as like have you seen the Japanese cat? Where is that cat? I don't think it's here right now. So there's a Japanese cat and it goes like this. It's like a little cute cat.
The white cat that waves
White
all the
cat.
time.
So
Yeah,
that
yeah.
cat is like a welcome cat. So they put
Yes.
it in stores because they're like it's like welcoming customers, sort of like a
He
thing, right?
they used to live in Chinatown, so
Yeah, yeah. So that is kind of like my sister. She's
yeah.
amazing at like building really fast rapport with people, like
Mm,
very, very fast. And then like I can come in and explain even more in depth what we're doing, what the projects are, give them insight, and then like then they feel confident because it's like two different styles.
yeah,
Um, and that's an important point. Like when you're doing this, whatever your specific skill set is, there's someone out there that needs it. So like how we grew so fast is like I said, we partner with the right people. Our very first project, and Nan, my sister, met the person that she invited us to the deal. So basically we bought a 76 unit apartment in Phoenix, Arizona. We had zero experience. The person who invited on to the team, her name's Elisa. We met her at an event, and I told her at the time I could raise money. I just told her because I wanted to be on a deal. We didn't live in Phoenix. We didn't live in Dallas. We live in Los Angeles. We didn't have the ability to source deals. So the only thing I thought we could do to position ourselves was tell everyone we can raise money, though we've never raised any money. And
yeah.
then like she invited us on the deal. We actually did raise money, and then we figured it out. And then like Nan saw my sister saw her like beginning of June, and she said she asked Nan asked her like, why did you believe us? And she's like, no, I knew you guys can do it. I knew you guys can do that. I'm like, well, that's amazing that other people had that belief even before we
And
did.
that's you stepped into your own confidence
Mm,
and saying that, and then somebody believed in that,
yeah,
confident, right? And
yeah,
so having a team that supports, as maybe we're not, I've been thinking again about this a lot, is we're not fully us. And as
mm,
a business
mm,
partner or a team member or whatever, it's to help each other become the better version of themselves. Whether you're part of
yes,
a round table, like I'm a part of Perry Marshall's round table and other communities, and if they're pulling you down, then that's not a healthy community or relationship. But if
mm,
they're helping you strive and they see what your like superpower is, and you're able to step in that, that's that's where that 10x thing happens,
mm. It's like
right?
they have to believe in you, but you also have to believe in yourself as well.
Yeah.
Um, like every time we raise more money, it's not like I don't get nervous. Like the first time we raised, the big amount that we raised the first time was like 33 million. And before we did it, I was like, that's a lot of money.
Yeah.
How are we gonna do this? And they're like, we talked about it amongst ourselves. And we're lucky we can do this, and we did, which was amazingly. And that happened right as interest rates started increasing. So it was kind of interesting. It's like 3 years ago now, and but one thing that one of my mentors said was like, you can borrow, like we can borrow his belief in us before we develop that belief in ourselves. And
Mhm.
that's
Yeah.
kind of the same thing. Like the partners you have to believe in their ability to execute, but you don't want to let them down. So you figure out, and like one of the biggest things that we always talk about is like grow your wings on the way down. Because if I'm if I have to prepare and become like 100% ready for something, I would never get started.
Yeah.
And Alex Hormozy once recently said that the difference between people who are successful and people who are very successful is their speed of implementation. Like you
Mhm.
get an idea, you execute as fast as possible. Sometimes it works, sometimes it doesn't, but you get to know really fast. A lot
Yeah.
of us were stuck with like the best idea and we hold on to it for 20 years, never doing anything about it.
I call some of those the entrepreneurs.
Mm,
Uh, they just want to be entrepreneurs.
yeah.
Or as my wife, she's been like learning some of this, but she's a 5 on the Enneagram, so she takes in information and wants to get it right. And so as we've been, and you mentioned this, you said my mentor.
Yeah.
Um, a lot of people don't have mentors. They don't even know, and sometimes your mentor helps see what you don't see. And so, as we were in some of these masterminds, they're
Hmm.
like, "Yeah, this is what you're doing." And so that speed to move
Hmm.
uh, is sometimes both a strength and a weakness.
Hmm.
Uh, And so, like, you don't want to like go haphazard into a bad deal. You want to
Yeah.
make good number of decisions, but then
Yeah.
you have to jump.
Yeah. It's like make good decisions, but just make them faster.
Yeah, yeah.
That's the point.
And,
Like,
and probably what the way you guys have done it is because you're tracking your numbers regularly. You
yeah,
can,
absolutely.
I bet you, I don't know I mean, you well, but I bet you could pull out your YNAB or your budgeting software and probably make a decision because you have it pretty organized, I would
Yeah,
think.
absolutely. So every single so this is how our structure works. We have our property management company, third party, we hire for every single property who
Mhm,
runs the day to day. They also handle the back end financial. So they report to us on a monthly basis the full financial. So we'll have like a profit and loss statement, which is a T12. We'll have
mhm,
the rent rolls. We'll have our general ledger. We'll have other financial variance report, a whole bunch of different reports. They send that on a monthly basis, but before that happens, we also have weekly updates every single Monday. There's
mhm,
certain KPIs that we track: occupancy, collections, delinquency, expense, big ticket expenses that are coming up, maintenance reports. Ultimately, all those factor into like very simply we can see like is this property
mhm,
trending up or trending down, and especially like NOI and like net cash flow. Those are probably like two of the most important numbers because like if you have the net operating income at least as expected or going up, that's amazing. But if you have below the line costs that's eating at your cash flow, that's going to show up in the net cash flow number. So
yeah.
having those two numbers, just those two, even with regards to whatever else I told you, if you know those two numbers, you will know that property is doing well or not.
And I think as I talk to real estate investors, they don't know their numbers or they
Yeah.
can't tell. And so you just, said, hey, by doing that. And, I have other people that help manage those.
Yes.
Um, that's their superpower. But for me, I want to make sure, hey, are we in the black or the red?
Yeah.
Pretty simple. If we're in the red, that's a problem. We need to fix things.
Right.
Um, and we're in the black, and then the goal is to always be in the black, right? However, most businesses or even deals
Hmm.
run in the red all the time. And we're like,
Yeah.
well, we'll just keep it this way. It'll be fine. How have you, as you've raised money,
Hmm.
um, not been in the red world? Because you in the financial fundraising, it seems
Hmm.
like sometimes it's always about, well, I just need to raise more capital. If I raise more capital, it'll solve the problem.
Yeah,
Uh,
no, I mean, you can't really use that because like our investors have different have like a certain
mhm,
return expectations. The more money you raise, the more diluted their returns are. So a lot of times, like some deals, it may start out in the red, but that's expected. Like we knew that was going to happen. We have to do certain things to the property to just for it to be in the green. So you raise enough money for it. The couple ways that we do this is like we want to always have like a healthy capital reserve
mhm,
for like our I'll give you an example. So for our construction project, we're building 118 townhomes right now. We're in the middle of vertical construction now. So that's the construction is in two phases, horizontal and vertical. The horizontal was like I think $4+ million. Within that, we had a $500,000 contingency beyond like whatever the construction budget is. We add 10%. Like beyond that we had this extra contingency. We ended up not using it because it was under budget. Now we're in the vertical phase. We're about $2 million below budget on the construction cost so far, knock on
yeah.
wood. And then we have like a $2.5 million reserve, like a rainy day fund on top of that, so that's 4.5 million. And on top of that, we have like an interest reserve of $1 million. So just on the vertical construction side, we have $5 million of reserve for our
Yeah,
construction
the
project.
liquidity, that's, something that I think that, as we were talking in the beginning,
Yeah,
when we get into this world of entrepreneurship or business ownership, we're taught invest in other people's business, put in
yeah,
your 401 401k.
Mm,
Having money in savings is stupid.
right.
Um, but you just said I have a lot of lazy money,
Yeah.
just in case, oh crap fund kind of a thing.
We have to, especially in development. But what we do, not in this case, but in other deals, is we put it in like a CD, a rolling CD. So
Yeah,
we cannot legally put it in a money market account just due to the structure. A lot of banks don't allow it. But what we do is we money that we know are just sitting there in our savings account, we put it in a rolling CD. We will do it in tranches. Some 6 months expiration, some three, some one, so that we always have 50% of that available
yeah,
in case something happens. But like it's so in construction, especially in the development, is so important because what if cost overrun happens, because it can,
yeah,
and like we cannot raise more money, so we have to raise. For us, we try to raise everything up front all at once.
yeah,
And the most important thing is like, while we do the financial model assuming the best case scenarios. Okay, we're going to rent it out for this much, we're going to refinance. We also do very detailed what are called like sensitivity tests. So that's like sort of like bad worst case scenario, what happens if doesn't go as planned, how
yeah.
long can we survive, and then we then build in reserves to make sure that we cover those.
Nice. And I think that's one of the cool things is you did the having that liquidity. I might say, as a shameless plug, whole life insurance properly designed can act as a CD. Um,
I think that works for probably like personal, right? And I think they should do that actually, to be honest. Like if they're doing a project, they should put money in something that's earning money. And
yeah.
if they need it, then they can pull out. That's the best way. I totally agree. It's
You
basically the
might,
same
you
thing.
might be able to do other things like business too. It
Really?
was different. Yeah. So I like to personally have it on my personal balance sheet versus the business.
Yeah.
But there's other ways because you are the greatest risk. And
Yeah.
so, whereas CD doesn't have a death benefit, a life insurance does. So then, if something happens, let's say you use that 50,000. Anyway, it's just another way of
Yeah.
uh, using leverage
Mhm.
and and having it do two things at once.
Yeah.
Mm. So, yeah, it's just one of those things where I think for you, it's like having that liquidity is huge. Most people don't even think about that,
It's so
right?
important. It's like
And
you don't need it until you need it, and then you're like you can't get it.
yeah, yeah,
It's so like it's such a peace of mind, like navigating through this kind of crazy time that we're in, to know like, okay, we have a 5-year rate cap on a 3-year construction project, so interest rate will never go higher than this for us. We will never pay more than this during the hold.
yeah,
We have all this extra money just sitting there just in case something happens. So it's like, because like I said, it's so important for us to protect our investors money. So there
mhm,
will be black swan events that we can't predict, but to our best ability, whatever we can anticipate, it's our job to do this. We are their fiduciaries, they trust us with their money. We are expected to be professionals and have that.
yeah,
My friend is in an investment with a really prominent developer, and he's invested, he said, in 2018. They're doing similar, like a new development. They haven't done anything yet, because when they raised the money, they were raising it to buy the land, and the cost of construction has gone up that they cannot afford to build now.
yeah.
And that's like that person's money has been stuck there for 7 years.
Do
Like that's
you
unacceptable.
see that? So I was told just
Yeah.
recently about uh, the economy
Mm.
China in
Mm.
China
Yeah,
where
yeah.
something happened um, where there's all these half-built
Yeah,
apartments.
I study that a lot.
Um,
So basically what happened with those is like the way they do their financing is not the same as the United States. First couple of things. In China, there's a culture of saving money, but there's also very few investment vehicles they can put their money in. It's very difficult for them, for instance, to invest in the stock market there. So a lot of people pour in their money into real estate. What happened is that companies like Evergrande, one of the largest, how they were, it was almost like a Ponzi scheme. So for instance, you want to buy a condo in building A. So
Yeah.
you put in a deposit. You put in a deposit and you're paying mortgage. They take the money that they were going to use for building A and they start building building B. And then people who put in money building B, they do the same thing to C, and it keeps getting bigger and bigger. The problem is the Chinese government a couple of years ago, they revamped their financial system to have this three-line test to make sure that the businesses were solvent because people were just borrowing like crazy. And
Mhm.
because of the new rules, these companies no longer can afford to borrow more money. And
Yeah.
that's why everything fell apart. That's completely different than the United States. We are like, thankfully after 2008, our financial system is significantly healthier, but
Yeah.
also the rules in place makes it so much harder to just willy-nilly borrow money. It's
Yeah.
not really possible now. So like
This,
that's what's happening. And that's also happening with their electric vehicle. That's a new thing. That's a new ticking time bomb. That's about to happen.
I think that that is where there's need for making sure we don't like cut everything and there's no checks and balances,
Yeah.
right?
Sure.
Um, and that you're held to a standard, hopefully, to where you're not. Oh, I'm gonna borrow from the or get money from the investors and then go to Tahiti. Uh,
I mean,
right.
it's really, is it possible? I mean, it possibly can happen. Luckily, it doesn't happen very often in our business.
Yeah.
Um, it's obviously very, you can go to jail for a long time. You steal people's money like that. But like,
Yeah.
so let's not do it because this is the thing that I told someone recently. It's like, there's a very small difference between someone who goes down a criminal path and someone who becomes rich. The person who, it's like they have this ability, but they chose to use it towards something nefarious, like steal people's money, sell drugs, all that stuff, because they didn't realize that actually making money legitimately was easier, and you have a longevity and you don't go to jail and you don't die.
Yeah.
If they only realize that, all these smart criminals would probably become just wealthy people.
Yeah.
Like that's the distinction. It's like, why would I want to steal your money when if I do this long enough, I will make way more than that? It just
Yeah.
doesn't.
Yeah. Well, anything you want to leave our listeners with? Any like I know you've already dropped so much wisdom here, but anything you want to make sure
Yeah.
we share that we didn't share, and how can people find you?
Yeah. So one of the things that I'm kind of like, I don't know the word is concerned, but basically it's one of the biggest things that I'm really thinking a lot about is like the post labor world.
Hmm.
People can acknowledge it, people can stick their head in the sand and not pretend it's not happening, but humans are being replaced by AI and humanoid robots. That's happening like right now. And
Yeah.
the people who rely on wages as a way to earn income will be decimated. The most
Mhm.
important thing right now is you need to find a way to own property. And property in this case does not mean that you have to necessarily only do apartments like us. You can have life insurance policy that actually produce income beyond that is separate and completely distinct from your labor, because your labor may not be there. The Bureau of Labor Statistics says that by 2030, which is just basically 4.5 years from now, 30% of American jobs will be eliminated. This is not just like blue collar minimum wage work. We've already seen that happening. You have a finite window right now to become the owner of property. You can do that through some sort of business that doesn't rely on your income. You can do that through some sort of infinite banking strategy that allows you to earn income without you working on it. You can do that through real estate, syndication, all that stuff. But trust me, in 5 years,
Yep.
that's going to be something that you're going to look back and be like, wow, I should have done something about it. So, like, it's so important that we all spread this. Like, we cannot ignore it. It's happening. You
Yep.
can like it or not like it, it's happening. So, make sure that you stay on the side where wages isn't the only way of earning income. And for us, if you want to learn more about us, we have a free community. Right now, there's a waiting list, but as soon as we let people in on that waiting list, you'll be able to join our free community that we talk about all this stuff all the time. And it's a way for us to communicate and connect with a whole bunch of people that are like-minded and are ready to grow wealth beyond them, beyond just what you make, so that you have a lasting legacy.
Yep. And that's a great mic drop there. Here's a link to her community. as you notice, Wealth Beyond Me, similar to our community, and that's why they're very similar to us. Um, and I do believe what she is saying is the divide with AI and what's happening now is happening. And if we aren't understanding or even kind of being a part of that conversation, um, we will be left behind. And so that's something that I think is so important, that we are the masters of our own financial destiny. We start realizing that almost everybody has a side hustle now or something. And don't just wait and think that your job is just going to eventually give you a pension or something. That those days are over. Those days were over a long time ago. Um, but it's getting more and more challenging, and be the master of your own ship. So, um, thanks, Palmy, for being here. And I loved having this conversation. And we love talking financial strategies, helping people like be in there. And hopefully somebody will come and say, hey, I want to talk to Palmy. And I think that that's powerful. If they do and they come from us, make sure you guys mention Wealth Wisdom Financial and say, hey, I heard you on Brandon and Amanda's show. And don't forget, hit that like, subscribe, share this with a friend, and we will see you guys next time.